All right, good morning, everybody. Let me get this thing set up here. Daniel, good morning. Nice to see you. Guys, welcome to the education room. Nice to have you here. Hope everybody's doing well today. Excited about hanging out, excited about getting some work done with you guys. My name's Mark Novak. I am going to be walking you through each and everything that you can do with the software today, and we're going to spend a lot of time looking at these live charts, putting a read on it, making sure that rules are being met. We're going to do a quick little synopsis on the rules, but I can tell you guys, ultimately, it revolves around having very strong triggers, nothing in the way, and then looking for that opportunity to take a little bite out of the market. So we're going to talk about each of those rules. I'm going to give them to you. We're going to be focusing on two charts today. Let me pull these up for you. And guys, I was talking with John this morning, and we have an awful lot of videos. Let me direct you to them. There's those rules. But if you come to the Nexgen YouTube page, I'm going to give you this link real quick, and you hit live. What we do have, kid you not, is about 40 days worth of the first hour of rules. Go back, watch these videos if you're a little unclear on the rules, if you need a little help with the rules, because I'd rather look at live charts with you guys. Let's go through, let's talk about what we see, we'll talk about the rules as we see them, and most importantly, we'll get an opportunity to look at the live market, and you guys can see exactly how we're going to be reading the charts and what we're going to be looking for. And everything that I talk about today is going to come from the T3 education page. And everything that I talk about comes straight from this tutorial page. So there are no secrets with Nexgen. Each and everything that we do is available for you right there. Your trend trade rules are going to be right here in the tutorial section. And guys, I want to tell you that your high probability trend trade, what we're going to be focusing on today, this is the one that's going to teach you to read your indicators. This is the one that's going to teach you to read your charts. There are three essential elements when you're learning to read your charts, and it's being able to recognize where the market is likely to continue. We're going to talk about that in great depth and use that point for entries. We're going to talk about where the market is likely to go. This is going to help us make an educated decision regarding profits using Fibonacci. And then where the market is likely to stop, guys, this is what we call a termination condition. No doubt in my mind, we're going to see an awful lot of examples of this today. And more importantly, we have an awful lot of study work to do today, or maybe not study work. Let me pull this one up. If you guys have ever met John Novak, he is happy, but he is never satisfied. He did an awful lot of replay test pictures, just really focusing on the rules that we teach. So we're going to look a lot at those. We're going to look a lot at the live market today. And everything that we do is really just going to revolve around three rules on two charts. We're going to look at a 13-2 chart, and we're going to use that 13-2 chart to get the general temperature of the market. We're going to gauge the trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. And then we're going to focus on the first two rules on the 13-2 chart. Rule number one tells us that we have to have strong trigger lines, because strong trigger lines give us the advantage. They give us an advantage of momentum. And then we're also going to make sure on that 13-2 that there's no termination conditions, none of those areas where the market is likely to stop. Because when we have Rule 2 met, it provides us the advantage of a clear path. And then finally, we're going to talk a lot about entries, and we're going to use limit orders to buy or sell a pullback at an area inside of favorable large triggers. I won't be taking live trades in the classroom, nor will I be calling trades in the classroom. But as the rules are met, we'll focus on where those potential rule-based entries would be. And by doing so, it's going to give us the advantage of an entry where the market is likely to continue. This is our focus for the first 30 days as a Nexgen student. It's going to give you the ability to read your charts, And that ability to read the charts is going to put you in a position for success. As we go to the live market right now, this is the S&P. Let's do this before we go to that live market, guys. Let's check our news. If you were watching at 8:30 a.m. Eastern, you saw that there was some very high impact news, that CPI, that core CPI coming through. Anytime you see one of these red boxes on your news release, the market is more than likely going to move very erratically. It's going to jump around. It's going to become unpredictable. We don't pay attention so much to what the news is as much as the fact that there's probably some deep pocket investors making some decisions based on that news, and we just don't want to stand in front of them. We also had that medium impact news, the unemployment claims. It was good news, but we don't care that it was good news. What we're worried about is the fact that somebody said, if there's good news, I'm going to dump $1 million into the market, and it can make it move a little erratically. 10:30 a.m. we'll have natural gas storage at 101, 30-year bond auction. And then there's really not much going on until 8:30 a.m. tomorrow morning, 10 a.m. tomorrow morning. So each and every morning I like to check Forex Factory, make sure that I'm a good spot. I like to have this tutorial section on hand so I can focus on my rules. But guys, let's watch the market today. You guys okay with that? If we watch more live market than we do going through that first review, I've got the rules in video form, hours and hours and hours and hours of it, right here in the live section. So, as we get into the day here, guys, there's one thing that I'm going to ask each and every one of you. I'm going to go to the glossary of common terms, and I'm going to put this in the room. And this is such an important part of your education. Post your pictures. Ask your questions. Yesterday we had some of the most incredible pictures, some of the most incredible questions, and it turned into great discussions about rules. It talked into great discussions about chart reading, and I feel like a lot of people got a lot out of this classroom. So what we're going to do today is we're going to focus on the live charts, and we're going to also look at a lot of the examples posted in the room about what it looks like when the rules have been met. So without further ado, let's take a look at the live market, guys. And right now we have the S&P. And we have a couple things happening. The first thing that I see is we have a termination condition coming from the bottom. So we're just going to scroll back a little bit and look. When defining a termination condition, there's two things that happen. The first thing is that price reaches an area, and then you're just going to ask, where are the triggers? So when determining a termination condition, price reaches Fibonacci support, resistance, one-to-ones, divergence lines. If the trigger lines remain above that area of support, as they have right here, this is a termination condition. This is an area that is likely to stop the market. It may reverse the market based on that comparison. There's one from support. And guys, I'm going to post a lot of examples in the room. I'm going to try and do better than that arrow. Sorry, that was my fault there. Let me make sure that I can post that actual room. Here's your termination condition definition. Price reaches an area. Where are the trigger lines? That's rule number 2, making sure that we're no longer trading into termination conditions. Rule number 1 has us focused on strong triggers. What's a strong trigger line? It's really pretty simple. When the small trigger lines are above the large in an uptrend, when the large are wide and angled, this is a strong trigger look. Same thing going the other direction. When the smalls are below the large are wide, angled in the direction, this is your very best look for a high probability trend trade. This is what we refer to as odds favorable momentum. because the odds are favorable for that market to continue in the direction of the trend as long as these trigger lines are outside of the large. And you'll notice up top we had a slowdown, and that slowdown actually ended up with a reversal. When those trigger lines work their way inside of the large trigger lines, small inside of the large, you come into an anything can happen scenario. So guys, we're really going to keep this simple today. We're going to focus on the absolute best of the best. So we have strong trigger lines. We have no termination conditions. There's your first two rules in a nutshell. Visually, pretty easy to follow, pretty easy to look at. And remember that this is going to happen on the 13-2 chart. It's going to be your 5-1 chart where we learn to enter the market. Let me see if maybe there's an opportunity. Whoops. Let me close that untitled workspace so I can go back and forth. What we are going to look for right here on our 13-2 is we're going to look for those strong trigger lines, smalls above the larger wide, angle of the direction of the trend. I'm going to make sure that I have not reached an area, no termination conditions present. And guys, our final rule is rule number 3, and it tells us that we are going to put a limit order. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So when rules 1 and 2 are met on the 13-2, let's get this picture, because the crude oil market gave us a perfect example. Good morning, K-Dog. Good to see you, KR. We're going to use a limit order. And what does that mean? That means that the market is literally going to come back to us. And we are going to buy or sell a pullback at an area inside of favorable large triggers. So this is your rule number 3. This is your entry picture. When rules 1 and 2 are met on your 13-2, go to 5-1 for an entry. When I have odds favorable momentum, when I have no termination conditions, guys, we're going to buy or sell a pullback to an area inside of favorable large triggers. I want you to notice your areas can be fibs, mid-bands, or 1-to-1s. So this picture puts it all together. This is a high probability trend trade. This is your best of the best. These are your reasons to get into the market. Do me a favor, if you're brand new with me, I know that I'm kind of going through the rules a little quicker today, but I want to make sure that you're comfortable. Strong trigger lines, smalls above the larger wide, they're angled in the direction of the trend. No termination conditions, meaning that price has not reached an area and the trigger lines haven't broken. And then guys, we're going to pinpoint with accuracy. We are going to wait for a small retracement on that 5-1 chart, and we're going to have that retracement come right to an area of support or resistance inside of favorable large triggers. And at this point, we're going to enter the market. And this was a beautiful one. This one went from 75 all the way up to 14, where if you're a math guy, that's $390 worth of profit on a high probability trend trade setup that typically wins 70 to 80% of the time. This is what we're going to talk about all day, guys. So when we talk about odds favorable momentum, rule number 1, on crude oil, my smalls are above the large, but my large are red and going down. This is not an odds favorable look. If you look at, let's go to the S&P and we'll read some charts. Look at them pushing down over and over, just going after that market, aren't they? Everything cleared this area of support. When everything clears an area of support, it begins to act as an area of resistance. I want you to see what happens when this came to be. Your smalls are just now returning to the large. All of your trigger lines have made it through an area. And look at how price pulls back directly to this Fibonacci resistance inside of favorable large triggers. Guys, this is a perfect trend trade short coming from 4,005. And if you used Fibonacci for your target, we'll call it 39.9850. Now I have to do math. Is that 6.5 points on the S&P? That's about $600 worth of profit per contract as you go through. So if you're brand new with me in here, if you're on a demo, if you're working on that absolute best of the best, let me know. Are you comfortable with the concept? Odds favorable momentum, no termination conditions, looking for that area of entry inside of favorable large triggers, making sure that it happens on the 13.2, strong triggers, no terminations. Your 5-1 is going to be your entry chart. And guys, we're going to spend a lot of time looking at these entries on the 5-1 because when your trigger lines are stacked one on top of the other, when we have that advantage of momentum, everything tends to work out nicely. The market typically continues in the direction of the trend. So while we don't have odds favorable momentum on the 13.2, guys, we're going to go back and take a look for opportunities when we did. This is going to be your study tool. When the smalls are above the large, when the large are wide and angled in the direction of the trend, anytime I see one of these tails, I'm going to circle it. And when I circle these tails, what I'm doing is I'm circling that potential pullback on the 5-1. Everybody with me? Smalls above the large, larger wide, angle to the direction of the trend. This is the best of the best, guys. This is the one that's going to keep you working in the house. This is the one that's going to keep you from that dreaded 4-letter word, work. And look how often it happens. This is a setup that you're going to see throughout the day. It's not every minute of every day, but what it is there's enough going on that you're going to be patient, you're going to be insistent on your rules being met, and you're going to be able to recognize when you have odds favorable momentum. We're going to go to the next rule. The next rule is making sure that there's no termination conditions. So let's put fibs, mid-bands, 1-to-1s, everything back on. And we're going to take a look and make sure that there's nothing in the way that's likely to stop the market. And remember that a termination condition is just a comparison of where price is and where those triggers are. Because when price reaches an area, whether it's Fibonacci support, resistance, yellow 1-to-1s, a cyan divergence low line, a magenta divergence high line, any 3 divergences in the same area, large chart mid-band, guys. If we minimize this and we begin to look, we're going to start to recognize where those potential termination conditions are. We had a beautiful one right here that we spoke about. And as we come through with odds favorable momentum, smalls through the area, we're not looking at termination conditions. Those areas haven't been hit just yet. Same here, it's close, but not quite. Once again, clear path to get to that next area. Guys, tons of opportunities in the S&P today. As I scroll back a little bit, I can begin to see more opportunities that present themselves. I know I'm moving a little bit quicker through these rules, but it's important to me that you guys are comfortable and on board with me. Give me a Y in the room, please, if you're with me. We're looking for odds favorable momentum. We're looking for no termination conditions. And when we circle these tails, guys, let's see how many opportunities the S&P's presented today. We're looking for pullbacks to areas inside of favorable large triggers. And I want you to see this. Trigger lines stacked, right? Absolutely beautiful. There's a pullback. This one didn't slow down for almost 13 S&P points. So we pull back here. This one didn't quite make it. That's okay. Not every move is our move. This first one pulls back directly to those stacked trigger lines. Market moves up almost 6 points into this divergence line, creates a management opportunity, an easy way to capture profits. And this is all we're looking for. Nothing in the way. An awful lot of strength, guys, and your 5-1 is going to tell the story. Beautiful pullback, area of support inside of favorable large triggers. There's 5 points. Beautiful pullback, area of support inside of favorable large triggers. They gave us another 4.5 right here. And then things level out, go sideways. We begin to get divergence, and we have an opportunity to sit on our hands, to look at the smaller chart and recognize when change may be happening. And I'm going to go back to our termination conditions, and I'm going to talk about recognizing change, guys, and we're going to use divergence on that 5-1. And 3 divergences in the same price range may terminate a trend. And for those of you that are new, let's talk about what a divergence is. And I want you to think of it in the most simple terms. Divergence means there is a loss of momentum in the market. So if we rely on that odds favorable momentum on the 13.2, we can begin to see losses of momentum on this smaller, faster chart, the 5-1. When price pulls down and forms these pivots, if the market is losing momentum, what you're going to recognize, is that negative number, that cyan divergence line, right here at the pivot. This negative number in cyan divergence lines lets me know that the market is losing momentum. When it loses momentum 3 times, when those small triggers go from odds favorable to anything can happen, it gives us an opportunity for management. This is a slowdown that typically predicts a turn. 1, 2, 3 divergences in the same area. Trigger lines are below. This gives you an opportunity to manage out of a trade if the trade needs to be managed. You'll notice that your trigger lines are beginning to split and fall apart, and over here they're together and pushing up. We're going to focus on those best looks, guys. We're going to look for the greatest entries we can find, give ourselves the best chance of success. 1, 2, 3 divergences, small below the large, and look how the market works its way down. This is your management opportunity if you took an entry at an absolutely beautiful trend trade long. Pull back to the area of support. Guys, this one went from 86 to 97. That's 11 S&P points. And then those divergences gave you an opportunity to manage out if you were trying to hold for a bigger move. Once again, it pulls back. Here's my triggers. Here's my areas. We just didn't quite make it. Guys, it's okay. Good morning, Ed. Sometimes we get the best of the best, and sometimes we just sit on our hands and we wait for the best of the best. I've only made it back to 8:30. How do we feel about this look, guys? 8:36. Let's put them together. I want you to see both of them together. 8:36. The S&P is an ATM today, guys. But you have to follow rules. This is going to be our last one, and then we're going to head to the live market, guys. I don't want to miss too much of this. Pretty excited about it. All right, here we go. I'm going to put a checklist on this trade. Guys, this is your high probability trend trade checklist. This is how you're going to police yourself. This is how you're going to make sure that what you're doing fits the rules, especially as you learn the rules. And I'm going to put that checklist in the room for you right now. Is the market coming from a good top or bottom? Is the market coming from a termination condition? Let's not overthink it. Do we have an area termination that creates a full reversal. Guys, this one came from beyond. This is not a good top or bottom. This is just a pivot that decided to go down. So I'm going to put no, but it's important that you understand that this one increases the likelihood of success, but it's not mandatory for that high probability trade. What is mandatory is odds favorable momentum. Smalls below the large are wide, they're angled in the direction of the trend. Guys, this is the equivalency of a, I don't know, 20,000 pound semi going down the highway at 85 miles an hour. It's going to take an awful lot to stop that thing. Do we have no termination conditions? Well, our small triggers have smashed through that area of support. We have odds favorable momentum. This is an area with the potential to break with that great momentum. And then when this happens, all we have to do is turn our attention to the 5-1. Do I have an area of resistance inside of favorable large triggers? Guys, I have 1-to-1s right there at the bottom of this window of opportunity. And my window of opportunity are going to be the areas inside of those favorable large triggers. There's 1-to-1s, there's a mid band right below. Guys, you can pinpoint with unbelievable accuracy where that market is likely to continue. And when you do so, let's make it a little thicker, you're going to enter at 4,150, and this thing doesn't miss a beat all the way down to 39.92. When we talk about the best of the best entry, guys, there's no divergence on this 5-1 chart. There's odds favorable momentum and a tiny little window of opportunity. This is a trade that when you follow these rules, when you study this template, typically wins 70 to 80% of the time. Guys, do me a favor. Give me a Y in the room if you're with me on this look, because all we're going to do today is we're going to read indicators and we're going to wait for this to happen on our best of the best. So let's get to that current market and see what's going on. Day late and $1 short, right? Small triggers above the large triggers. Large triggers are wide, angled in the direction of the trend. Guys, look at this pullback directly to an area inside of favorable large triggers. Where's this market headed? Well, my trigger lines tell me that those buyers are dying to see that fib. So not only can I determine that the market has amazing momentum in this uptrend, that the market has no termination conditions, guys, we were able to pinpoint with unbelievable accuracy where that market is likely to continue. I get excited when I see this. That's your window of opportunity. If you were in at 99.50, by the time you get to 4,350, guys, if you're trading a conservative approach with your management, and I'm going to show you the most conservative approach. So when we talk about management today, we're going to keep it simple and try to look for $300 each move, 2 contracts. While we do this hypothetically, I want you to see this. I'm going to enter the market at an area of support inside of favorable large triggers. I'm going to take my first profits at $100, which means that at 4,150 right here, I'm $100 in the bank, can't take it from me, no worries at all, and I'm break even in the trade. I'm going to look for profits at $200 on my second, which is 4,350, which means that this trade that just happened per the rules was a $300 winner, and your final risk on that trade as you get into it was approximately 1.5 points. Your job as a new user is to take this every time you see it, to take that picture, to post it in the room. Let's talk about the rules that you see. And I want you to look at this, 2 divergences. Look at where your small triggers are, guys. This is a management opportunity. When you begin to get divergences in the same area, let's look at those small trigger lines. They went from odds favorable and they broke inside of those triggers, didn't they? This is a great indication that the market may push back a little bit, and it certainly did. Directly to support, with all the triggers above, likely to hold, right? Large triggers are still up, small triggers are up with strength. dollars to donuts, that's what they're trying to get to. You're witnessing a battle right here at this key Fibonacci area. You're watching buyers and sellers fight it out, looking for supremacy to make that next key area. And we're going to see what happens. We've had multiple divergences. We've had large triggers come down. And you'll notice on a 5-1 at these key Fibonacci areas, do you see the fight? Buyers push up, sellers push down. Buyers push up, sellers, buyers, sellers, buyers, sellers. Our 5-1 shows the fight for supremacy right here between those deep pockets investors, and you'll notice that it's always happening at these key Fibonacci areas, which is why we respect termination conditions the way we do, which is why, how do you rename it? 7 or 8, Elvis? File, workspace, save workspace as, and then it'll give you the opportunity to rename it. Cool. And guys, that's the other thing this class is for. If you have a question, ask your question. All right, S&P has fought it out. Look at what we see now. Small triggers are below the large. But what direction are your large going, guys? Do you see it? First glance, what direction? We still have those large triggers up, correct? Which means we're not looking for shorts, but now they begin to roll. Now we're seeing the signs of change on that bigger, slower chart. 1, 2, 3 divergences in the same location. Smalls down, large down, everything says down. But we're directly into support with absolutely no trigger lines through. Let's give it an opportunity to break, and then we'll look for a potential entry. This is what we call a split trigger look. It creates a window of opportunity that in some cases for that high probability trend trade becomes a little too large to trade. But now when the trigger lines come together, let's watch that 95.50 area. Well, they're not even going to get there, are they? Smalls below the large, larger wide, angled in the direction of the trend. There's that key pivot stop out area, that divergence low. There's your Fibonacci support. Where are your trigger lines, above or below? They're trying to break, but they haven't yet. Guys, this is all we do. All day long. What do I see? What does it mean? Where are my triggers? Do I have an advantage? I don't have odds favorable momentum anymore, do I? I did there. And doesn't that look beautiful after the fact? And why do I say after the fact? Price reached an area of support. Absolutely no trigger lines had broken through that area, guys. This is a termination condition. Rule 2 not met. And therefore, there's no trade. If your rule hasn't been met, there is no trade, and it doesn't matter what happens after. You ready? This is the market training you to break your rules, because we know through 20 years of study that these Fibonacci areas of support, when price reaches them, when no trigger lines go through, can create a bounce large enough to create a loser, especially when we didn't quite make that next key area. So you wait for the best of the best each and every time. What do we have going on here? We have a pivot, stop out, pushes all the way back to support. The market pushes up again, comes back to support. It pushes up again. Once again, we're watching that fight between buyers and sellers. Do we have odds favorable momentum to the upside? Anybody? Not yet. We have 3 divergences on the 5-1, letting us know that this long isn't our best option. We also have a pivot stop out in a lower divergence on the 13-2. Guys, we're in a moment of consolidation. We're going to wait for each chart to agree. We're going to wait for each chart to have strong triggers, no termination conditions, and then we will look for an entry at an area of support or resistance inside of favorable large triggers. All right. Let's go through and look at some of these pictures, guys. I have about 800 pictures today, and all of these revolve around the absolute best look for entry on the 5-1. And I want you to notice, triggers are strong, everything says down, and your absolute best look for a 5-1 trend trade are those triggers one on top of the other, your large triggers inside of your synthetic triggers. And look how price pulls right up to that mid-band inside of that key area and then pushes down. Right at the top of the area. Notice that the large and the synthetic are touching. Large and synthetic are touching. Awful lot of study going in here, guys. When the rules are met on the 13-2, it becomes effortless to identify your best of the best area. Hey, good morning, Nexgen Ben. You begin to put yourself in a position where you can identify where the market is likely to continue, and you can do it pretty effortlessly. And if we go back to that tutorial section, everything that we just talked about looking at the live market, rule number 1, defining the momentum, making sure that you have that odds favorable. Rule number 2, being able to identify termination conditions as they happen, understanding when you should no longer be looking for short trades, or identifying that termination condition that creates the reversal to give you a great advantage on that other direction. And then guys, here's a wonderful one. Being able to pinpoint that best of the best area for entry. Remember, we're using a limit order to buy or sell a pullback to an area. A pullback starts with a reversal bar. Your areas can be fibs, mid-bands, or one-to-ones, and just like the pictures that we saw, we want those areas inside of those favorable large triggers, angled in the direction of the trend with an awful lot of strength. The further away your small triggers are from your large triggers, the stronger that move is on your smaller, faster chart. Guys, termination condition, 39.7867. Look how it hit that fib. Absolutely no trigger lines break through. Give me a Y in the room if you can see that as clearly as I hope you can see it. Price reaches support. When it does, I have to ask myself, where are my trigger lines? Well, all of my trigger lines remain above that area of support. This should be enough to keep you from looking for that short. And now it's given us a full reversal. Now I'm looking at that large trigger turning. It is a vacuum. So we're not quite where we need to be, right? Price reached resistance. All the trigger lines are below. And guys, Ben just put it in there. He said vacuum. What does he mean? Let me show you a great picture. There we go. When price reaches a key area, whether it's a Fibonacci resistance support or a mid-band even, if your large triggers remain below this reversal bar marker, which means that they're a full bar away, there's room for an entire reversal bar to get back to these. This area in between the top of price and those large triggers, it acts as a vacuum. Price snaps back to those large triggers. Guys, this is a phenomenon that you're going to see every day. This is something that you're going to witness on every chart, every time frame. It's this snap back to the large triggers that typically gives us our great entries on the 5-1. Let me find, I know that I have a great picture of this one. Guys, if I'm going too fast today, let me know. But I want you to see this. This is the gap theory. And the gap theory simply says that if price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, then it will snap back to the triggers. Synthetic triggers are wide the other way. Price pulls back. It's like a slingshot. It's going to pull right through, and that area is going to act as a vacuum. And what does that mean for us? Well, it means that attempts at longs into this area typically result in a quick separation between you and your money. This is probably one of the best chart reading lessons for new users. Whoops. Price pulls all the way to Fibonacci resistance. The large triggers don't follow. And look at how price snaps back and comes and retests this area. Right back to support, right back to that divergence low. If we get through this area, if we get odds favorable momentum, nothing in the way, we have two areas here. Resistance, mid-band, 1-to-1s, but those large triggers are split a little bit. Not our 100% best high probability trend trade look, but notice how they start to come together. And by using Fibonacci, we can identify that next key area. Now we have odds favorable. Now we have no termination conditions. Now I have a stacked area of resistance right inside of favorable large triggers. Guys, is the market going to be nice and come back? This is what we call a pre-trade picture. I can take this picture and I can verify that my rules are met. There was a termination condition that created a full reversal. I have odds favorable momentum. There's nothing in the way. And I have an area for entry inside of favorable large triggers. Sometimes the market will come back and get you. Sometimes you've got to look for that next best opportunity. Remember, we're not in control of the market. It's either going to come back or it's not, right? We don't get to control that. But give me a why in the room if you recognize we had the advantage of momentum, we had the advantage of no termination conditions with that odds favorable momentum, and we have a stacked area inside of those incredibly strong trigger lines. The odds are in our favor that if we're given an entry 70 to 80% of the time, we're going to reach that profit target. What's the flip side of that coin, guys? 20 to 30% of the time, it's just not going to make it. Smalls on the tail end, right? All my large triggers coming down strong, zero termination conditions. Window of opportunity stretching from 40 to 50 inside of favorable large triggers. And 40 lines up with an area that's already been broken and is acting as resistance. Let's see what happens. Let's create that window of opportunity. And let's see if the market's going to do what the market does. Smalls are outside of the large are wide, they're angled in the direction of the trend. There's no divergence on a pullback. We have an easily identified window of opportunity. Guys, now we're just waiting to see. And it doesn't look like they wanted to get us on that pullback. Good morning, Mike. Good to see you. The window of opportunity is still present. And look how the market's wanting to come back again, guys. This is one of the reasons that I absolutely refuse to chase trades. If I'm not filled, I'm not jumping in down here. Remember, fights happen at key areas. We can identify the key areas with Fibonacci. Thank you, Nexgen. We can identify the momentum through the T3 trigger lines. And we can identify a window of opportunity for a potential trade to continue the trend. That one hit 78.40 to the absolute tick. And we'll see what happens. Notice that we're losing momentum a little bit on the 13.2. The smalls aren't the best of the best look. They're rolling in on them a little bit. We have one loss of momentum on the 5.1. Just going to be patient. Let's see what happens. And Dave B, let's take a look at your picture. Guys, this is the second half of class. You're posting and us talking about what it is that you're doing. And I love this. 13.2, odds favorable momentum. Everything says down. There's a pullback directly to an area of resistance inside of favorable large triggers. Lines up with a high volume area on his 8-range chart. David B, absolutely perfect read. Absolutely beautiful high probability trend trade. As I want you to notice, David B put a checklist on his chart as well. He made sure that he was following his rules, that he had every advantage, and that advantage panned out beautifully, didn't it? Nice job, Dave B. Ron C, because I haven't had heartburn in a while. Ron C says 3 divergences on the 13.2 is a major termination condition. He has a little different plan than the high probability trend trade, but I want you to notice something. Odds favorable, every area cleared. Ron takes an entry and takes profit. One of the great things about Nexgen is you're going to find what suits you. There's going to be trades that you're comfortable with, that you see instantly. There's going to be trades that maybe you struggle with, and those are better left on the back burner. But your chart reading is going to get you to where you want to be. And let me see if I can find my favorite quote of the day here in the chat room. Guys, John Novak posted in the room earlier. He said, "He who takes the most picks wins." And that's such an important concept that whoever is taking the most pictures typically ends up where they want to be. Whoever is posting the most pictures in classroom, getting the most feedback, those are the ones that are getting where they want to be. Let's go into a little chart reading once again. We've lost the momentum on our 13.2. Because we've lost momentum, there's multiple areas where this market could potentially push. We've lost momentum on the 5.1, 1, 2, 3 times. If this is an advantage, if those odds favorable momentum strong triggers are an advantage, you have to look at that loss of momentum as creating a disadvantage. It's giving away one of the advantages that your rules provide. As the market comes back in, as that divergence prints, just like we said, it's slowing down, may push a little higher, and it certainly did. One of my favorite quotes, Ron, learn the rules like a scholar so that you can break them like an artist. I do love breaking rules. I try not to, but I do break them. You will too. Guys, the key is to understand if you've broken your rules. If you take a trade that's outside of the spectrum, do you understand it? Do you realize it? Can you recognize when those rules are met and when those rules are not? I'm going to scroll back through a couple more of the pictures posted in the room. Guys, here's a pre-trade one. And I want you to know that anytime I post only a 5-1 chart, it means that the rules are met. It means that the rules for a high probability trend trade have been met on the 13-2. Odds favorable momentum, no termination conditions. And this is exactly what that limit order, waiting for a pullback to an area of support right there at those favorable large triggers. Guys, that's your best of the best look. Once again, there's that pullback directly to support inside of favorable large triggers. That's your best of the best. I'm going to take this picture again. Here's a picture of an entry, right? Small triggers above the large triggers, absolutely perfect, no divergence. Let's talk a little bit about stop placement. In the beginning, I have my ATM, my NinjaTrader set to 12 ticks. And that's typically what the initial risk is going into a trade, about 12 ticks. That initial stop is going to go where the market shouldn't, outside of that window of opportunity. If my opportunity window goes from the highest point of support to the lowest point of support, my initial stop is going to go below that window where it shouldn't go. And what this is saying is that if the market does continue down through the area, if this is part of my 20%, well, then I want to be out. I don't want to hope. I don't want to leave unnecessary risk on the trade. And then the advantage of waiting for the pullback, the advantage of getting in at that best of the best spot is twofold. The first thing is once that reversal bar prints, you can reduce your risk. You can go from outside of the window of opportunity to below the reversal bar in the direction of the trade. But the other thing that happens is when you wait for that absolute best of the best, for that pullback, your risk is reduced dramatically. But more importantly, because we're all in this for the same reason, your profit potential grows exponentially. If you chase because you're watching ticks, your profit potential is reduced. If you jump in early because you're afraid of missing, your risk is increased. Guys, rule number 3, using a limit order to buy or sell a pullback in an area inside of favorable large triggers, that's the one that increases profits and reduces risk. All right, here's our second picture of that vacuum. Live market, just giving lesson after lesson. Anything can happen triggers, meaning that there is a loss of momentum on the 13-2, and price pushes all the way back up to this key Fibonacci area. Guys, give me a Y in the room if you see it. There's room for a full bar back to those large triggers. Worst spelling ever. There's that best one. Michael Bogaton, let's see what you did today. Like everything about this one, Michael. Where is my mouse? There it is. Is the market coming from a good top or bottom? Well, not really. We did have 3 divergences that created the full reversal. You could say yes. Odds favorable triggers. We're at the tail end of momentum. I like it. No termination conditions. Absolutely true. Area for entry inside of favorable large triggers. 100%. Guys, I want you to look at Michael's entry. He called the high tick and entered the market on the highest tick right at that mid-band. His first profit target, like we talked about in the room, was $100. He had $100 in his pocket in almost no time. And then the market begins to turn a little bit. That divergence prints, the smalls work inside. He says, I'm not willing to lose with conditions changing without that odds favorable momentum. Michael, I don't think you could have done this trade any better than you did it. This is absolutely picture perfect entry, picture perfect management. Nice job. All right, Mike, let's see what you've got. On a largest chart, everything says down. On a 13.2, Mike is saying this is an area likely to hold. Remember that vacuum lesson that we just talked about? Mike, I love this picture. Watch this one, guys. The room to the large will act as a vacuum. This is a very key pattern that we're going to see all the time. There will be a point in your life where you'll recognize that termination. You'll recognize that vacuum. Mike went short right at resistance as things began to turn. And we know that it made that 59 target. Since I'm no good at math, let's see. We'll just call it 5 points, right? Guys, someone help me. What's 5 points on the S&P? $100 a point? Is that right? Anybody with me? $50, sorry. $50 a point times 5 points. It's only $250, right? So let's multiply that by the 100 lots that were traded. And I'm not doing this, and you know what? Mike loves it. Guys, that was $25,000 based on Fibonacci resistance likely to hold, based on patterns recognized through study. Your chart reading is going to put you in a position to take advantage of these things as they happen. Mike's been with Nexgen for 9 years. And I tell you, he's gone through the exact same process that you have. Learn the looks, post your pictures, rinse and repeat. Learn the looks that are going to get you into the market. Post your pictures in class, guys. Ask for feedback. And take profits where it's appropriate to take profits. You guys have the advantage through Nexgen. You know where the market's likely to go. You know where it's likely to stop. You know where it's likely to continue. I love that pivot stop out right at support. Termination condition pushes down to the next one, gives us a full reversal, gives us odds favorable momentum. There's an awful lot of Nexgen users that love this point right here. Do you guys remember John Novak's lesson, X marks the spot? When you have a termination condition, when your trigger lines flatten out, when your smalls break above, this is one of those trades right here that experienced users are able to take advantage of their chart reading. And look what the market did from this key point, guys. We can identify where the market is likely to stop. I'm going to give one little trigger line look here that I want you guys to recognize. Price reaches the area of support. Everything still says down. Smalls are down, large are down. If you look at your 5-1 chart, everything is still working its way down. Well, when price tests that second area of support, we get a pivot stop out, meaning that price exceeds this pivot, this divergence low, and heads the other direction. Look at the difference in your small triggers versus the large triggers. Look at the difference in your trend from red to green. This area is likely to cause a bounce. This pivot stop out with this trigger look is likely to create this reversal that we just witnessed. And then that gives us an odds favorable momentum, pull back to an area of support inside of favorable large triggers. And congratulations, a lot of you are $300 richer right now as I speak. Give me a Y in the room if you see it, guys, because this is how you're going to make your money as a Nexgen user. And all you have to do is study, take your pictures, post your charts, and stay on simulator, getting the best of the best, developing trust, and honing in those skills to give you the best looks. Guys, this is absolutely beautiful. Termination creates a full reversal, gives odds favorable momentum. The market pulls back beautifully to an area of support. I can't make this up, guys. You just watched it. You just watched this happen right in front of you. We still have tail end of odds favorable. Everything says up. We do have an area right there at the bottom of those large triggers. But this is the one that gets you where you want to be financially as a trader, guys. Never missing that best of the best look. And look at your trigger lines. Large, inside the synthetics, and everything angled up. This is every lesson that we teach rolled up into one trade. I'm going to put this in the room, and I want you guys to remember this. I want you to burn this image into your brain because that's the one. All right, guys, I'm going to take a few minutes and wet my whistle. When I come back, we're going to start with Bobby T's. And then once we get back, we're going to take a look at charts. I have a picture to post in there. If you have questions, if there's something that you want to talk about in the second hour, let me know. Otherwise, we're just going to keep doing what we're doing. We're going to watch those indicators. We're going to read our indicators. We're going to give ourselves the best chance of success. And guys, it's up to you to ask those questions each and every time you have one. I'll be back in just a minute. All right, guys, we are back. Man, markets are moving, aren't they? A lot of people happy about their 401k with the ES going up like that, but we don't care. We're going to make it both ways, right? We're just going to wait for odds favorable momentum, no termination conditions. And then when everything says down, we're just going to go down with it, guys. Let's talk about this look right here. I'm going to blow this up a little bit because this is a great look for new users. Remember that anything that wins 70% of the time has to lose 30, right? Sometimes you're going to get into a trend trade. You're going to get in. Well, actually, I think that entry was a little further back. You're going to manage out and you're going to say to yourself, man, everything says down. Why didn't this market go down? Well, guys, we don't control the market. Sometimes the market has other ideas. If you take the best of the best trade that just doesn't seem to work out, what's going to happen is when it pushes over, you're going to see those small triggers roll over with all your other triggers down. And a little pullback to a key area at those small triggers creates an opportunity for continuation. It's just a continuation style trade. A great one to take pictures of, to talk about as we see it throughout the day. I will post them as well. So many opportunities today. Guys, I'm going to go through. Let's start looking at your pictures. What do we see? Loss of momentum, right? Divergence, 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 smalls inside. No areas inside of favorable large triggers. Good stuff. Bobby T, let's see what you did. Appreciate all the pictures, guys. Keep them coming. Keep the questions coming, too. All right. Is the market coming from a good top or bottom on the 13.2? It looks like blue support had momentum, thought it would push through. Odds favorable momentum, yes. No termination conditions. Bobby, the answer was no, wasn't it? And that was the first trade. The smalls had broken through. It looks like the second trade, we had reached our target. I'm trying to line up 404, 404. Actually, you know what, Bobby? I think you're okay. This first trade, everything says up. You jump out pretty quick with every advantage. I'm not sure why. Quick profits. And then second profits. Market pulls back right to that area of support. You get in, I'm assuming, after a market flow signal. Quick profits on the first. And then you were looking for that push through, but it just didn't get it. Bobby, I think the only thing that I can say about this, it's beautiful heads up trading. Everything looks good. On this final trade, Bobby, as you get in and the market moves up, we hit that key area right at those one-to-ones, that divergence high. Notice that your small triggers have pulled below the large triggers at this point, indicating a little bit of change on that chart. And it looks like you got out with the divergence, which is beautiful management. Nice job. Great trading, Bobby. Mike, silly bingo again. Everything says up. Every chart says up. Coming from termination conditions. Absolutely beautiful. You take an entry with market flow. Reversal bar at strong triggers, at support. It's likely to hold. And take it all the way up to 78. Mike, you're on it today. Nice trading. Here's that same picture. Absolutely beautiful. Everything up. Perfect entry. Out at the first trouble spot. Looking for the next one to run. Guys, is anybody unclear on what it is we're looking for to make things work in our favor? Termination conditions, creating full reversals, giving us odds favorable momentum. And guys, he gets in at 68.25. Right here at the mid band, just above it, inside of favorable large triggers. That's the best of the best. It's what we're focused on each and every day. Carl, absolutely picture perfect, same trade. Left a lot of meat on the bone, but still made some money. Nice trade, Carl. Mike, thanks for being here today, man. Elvis, you say he makes it look easy. You missed them all. Nine years versus 1 year, Elvis? Is that about right? We say this a lot in the room, guys. We talk about take pictures, take pictures, take pictures, post pictures. There was a post in the room earlier today. The picture count for John was 28,500 pictures. He has posted in the room 28,498 of them. Mike, you've got about 28,000 pictures as well? Oh, 2 pictures? Guys, the more pictures that you take, what are you doing with pictures? Well, you're cementing a look in your brain of the advantages. You're creating trust, termination condition, full reversal, odds favorable. What's happening? What do we see right here, though? You get about 100 a day, Ed? Guys, I clear out my pictures every day, and I fill this thing up probably 40 or 50 pictures every day. Let's do some chart reading, guys. Termination condition at the bottom, yes. Price reached an area of support, absolutely no trigger lines broke through. We do have odds favorable momentum to the upside. Does everybody see that? Smalls above the large. Larger wide, angled in the direction of the trend. Price reached an area of resistance. That area of resistance has absolutely no trigger lines above it. Guys, rule number 2. Just kept you safe, didn't it? Rule number 2 just kept you out of a loser. Give me a Y in the room if you see it. Even with the temptation. Guys, this is a beautiful termination, full reversal. This is amazing momentum look, isn't it? But rule number 2, areas that have the potential to stop the market, kept you out of that mid band, probably kept you out of that loser. The rules are designed to keep you safe. The rules are designed to give you advantages. Recognizing where your trigger lines are in relation to areas, larger above, smaller above. Does everybody see it? Guys, we're not looking for long trades from this side of the fibs when the triggers are above. I'm not looking for short trades from this side of the fibs when those large triggers are above. If this is really going to be a top, if it's really going to give us an opportunity for shorts, these large triggers are going to roll. They're going to come back down below. This market's going to give us odds favorable momentum. It's going to make sure that we're not trading into termination conditions. And then you're going to have the ability to recognize where the market is likely to continue. I'm going to go tap into some of those 8,000 trades that were posted this morning, guys. Let's just take a look at the look. I'll start at the top. Remember, in every one of these pictures, the rules were met on the 13.2. Price pulls back directly to an area of support inside of favorable large triggers. That initial stop of 12 ticks keeps us safe. If you exit at the pivot stop out on your 5-1, plus 5 points. Guys, this is done in some testing that was done on Market Replay. Triggers together, didn't quite make it. Triggers together, it does make it. 5 points plus. larger inside and areas right below. Does this count? I'm going to say small's below the large, even though the large are up. This is probably one that doesn't fit those rules quite the way we want it to, right? You didn't use a 13.2, only a 5.1. I didn't realize that. So this doesn't account for termination conditions when you should not do it. Still 80% win. And let me make sure that everybody's clear. Large triggers inside of synthetic with areas inside of those triggers, right? Guys, I've been watching Nexgen longer than I've been learning, and I can tell you that I don't think it's ever been easier for users. I don't think it's ever been easier for new users to be able to take advantage and recognize the looks when everything is going in the direction of your trade. And I do hate change. But it just takes a couple key elements, guys. It takes odds favorable momentum to make sure that that market is moving in a direction and has the potential to continue. Takes your ability to recognize termination conditions where the market is likely to stop and learning to respect that area. And then it's just a matter of studying that best of the best look to give you the highest chance of success each time that you trade. Keep it simple, trust your plan, and control yourself. Go watch charts, John. And John's absolutely right. Over 25 years, we get a tiny bit better each year. And that's why it's so freaking awesome and almost unbelievable for new users, but it's true. Making money is a simple plan and controlling yourself. Ed, that is. So this is, and I love this look, 13.2 large triggers, 5.1 large triggers. Because what's it mean if your 13 large triggers are strong in the direction of the trend and your 5.1 are strong in the direction of the trend? You have the best advantage ever. Look at this one, guys. Divergence. Now I have a pivot stop out. Once again, look at the difference in the trigger lines. Trigger lines up, trigger lines up. When we reach that 4,150 area again, look at the location of the triggers. We're still above support. There's still no short trades to be had, but now we're looking at a potential termination condition. If the market is going to stop here, then these are going to roll. If the market's looking to continue up, everything's just going to continue up and the charts will agree. This is where sometimes I like to go to a higher time frame. What does my 21.3 chart say about what we're looking at? Well, my 21.3 says that we traded directly into one-to-ones. A potential termination condition, a termination condition look, multiple divergences. No matter what happens, guys, they're fighting right now. Continuation. Ed, continuation is continuation of a trend trade that doesn't work, if that makes sense. If all the conditions are correct for a high probability trend trade and the market pushes back lower, then you look for potential continuation. This one doesn't really fit the bill. I haven't had a trend trade on the 5-1 at this area. No areas inside of favorable large triggers, right? Lots of divergences. No odds favorable momentum. So technically there wasn't a trend trade on the 5-1. So there can't be a continuation on the 5-1. Does that make sense? I actually had this explained to me, and I think it's just a little bit of verbiage. Control is the problem. As I think the more that you study a look, the more that you focus on what yields results. And let me go back up. What's yielding results, guys? Without question, well, this is odds favorable momentum, breaking through the areas, in a beautiful area of resistance inside of stack triggers. Guys, this is the look that yields results. This is the look that gives you the highest chance of success. This is the look that Nexgen users have been using for 20 years to be successful. The look is simple. It's your study that's going to give you the advantage. Pivot stop out, small's below the large are wide, they're angled in the direction of the trend. There is no divergence on a pullback. Let's see what happens in this area. We have traded directly into a mid-band, but the large triggers aren't quite a full bar away. Should we just take a second and see what happens? Oh, didn't quite make it, did it? Hit that mid-band of the tick. Go back to John's 5-1. You can't find it? Oh my gosh. Ed, there's been about 800 of John's 5-1s. You want to look at a couple of them? Let me scroll up. We'll get a few of them. That's a nice one. That one didn't quite make the areas yet. Z. Ed, I don't know if you can download things if you're on your phone. Here's every one of those pictures from John's 5-1. Ed, do you have an email? I'll be happy to send you that email since you're not in a position where you can get it. I'll email this one to you. So with the new chart, it's the exact same rules, Ed, 100%. 100%. It's the exact same rules. You're looking for odds favorable, no termination conditions. Looking for the absolute best of the best all the time. All right. And then you're good. Dab chain, you want one too? I gotcha. Dab chain, good to see you in here, man. It's been a while. Hope you're doing well. Guys, I struggle doing two things at once, so let me get these in there. Got it, got it, got it. All right, guys, those are sent. Let me know if you don't get them, and then we'll take care of it. We're just looking for the same thing over and over, guys. We're looking for strong triggers, no termination conditions. And look at this one. 50% of my trigger lines are below the area. 50% of my trigger lines haven't broken through the area. What do we call this? You guys remember the term for this look? When half are through, half are not? Guys, this is what we call a 50-50 trade. 50-50. Not your chances of survival. The chances, or it's just a representation. 50% of my trigger lines have yet to break a key area. 50% have already made it. If I'm looking for a short trade on a 50-50 trade like this, on my 5-1, I want perfect entry conditions. What does that mean? That means no divergence. Guys, this is the beginners. Look at it. This means strong triggers, small window of opportunity. So help me out on this one, guys. 50-50 trade. First one didn't make it to the area, right? You got it, Ed? Cool. Then divergence prints. Do you guys remember the rules for a window of opportunity? Areas of resistance inside of favorable large triggers. Guys, this window goes from 95.50 all the way up to 98.50. Is there anyone in this room that considers 3 points a tiny window of opportunity, a small window of opportunity? The triggers are split, not trending one on top of the other. The area hasn't completely broken, and now I have losses of momentum coming into it. A little bit of study, waiting for that best of the best trigger look, helps you out a lot. That's a lot of money to risk, right? To get to the next area. But now we're starting to break those areas. But it's still 50-50. 3 divergences, 50-50, smalls below the large. We'll see how that market reacts. And once again, this is where we can go to a larger time frame. We had a termination condition. Large triggers are still up, a full bar away. So maybe on a 50-50, that higher time frame says, well, it's likely to go down. We had a great termination condition. We can take this 50-50 and manage it aggressively. If we get in at the area, that's your look to go down. That's a good look. It's odds favorable, 50-50, no divergence, small window of opportunity. Just have to manage assertively, right? If you got in at the mid-band, you're feeling good about life right now. You're loving rules. Termination condition creates a full reversal, provides odds favorable momentum, no divergence, small window of opportunity. Didn't we just discuss the entry requirements? Look at this look, and look at this look. There's those large triggers coming right inside of the synthetics, right at the mid-band. Guys, if you're in at 93, when you got to 89, that was that $300 trade. John Novak believes it. Nice trade, John. Half off at the 1-to-1s, you said? 0 risk on the trade. Yuri, Let's see what you did. Nice to see you in here. Termination conditions, odds favorable, picture perfect pullback. First target just below the 1-to-1s. Second target down at Fibonacci support. Congratulations, gentlemen. Both of you had an absolutely beautiful rules met 50-50. Every advantage. Holy smokes. Let's wait for the next one to set up moment. Nice job, guys. How many people? Guys, we have 50 people in this room. I know a lot of you are new, so I'm going to put that formal request out to you guys. If you're brand new, if you need a little clarity, if you need a little help, if there's something that I can do to make this easier for you, let me know. Mike, I have no idea why you're showing yen. Jose trades. Let's see what you do. Jose does trade, absolutely. You took that short, made money all the way down. Bingo. Happiest sound in the Nexgen world, isn't it? Bingo. My goal is that each and every one of you are saying bingo every day. You will hear this term many times when a profit target has been reached and filled on a winning trade. Sweetest sound to a trader's ears, right? Bingo, right to the area where the market is likely to go. Remember we said our chart reading is going to show us a couple things. It's going to show us where the market is likely to stop, area of resistance, all trigger lines below. Where the market is likely to continue, area of resistance inside of favorable large triggers. Where the market is likely to go, Fibonacci support. 3 simple concepts. Now we have a termination condition, has created a full reversal, has given me odds favorable momentum, and we're just waiting for everything to catch up and maybe give us another shot. Telling you guys, class is an awful lot of fun to teach today. I hope you're having as good a time as I am. Termination to resistance, large triggers don't follow, and gets retested. To resistance, support gets tested, to resistance, and now everything is beginning to line up. This is that battle we talk about. The sellers push it all the way to the key area that Nexgen users knew about. The buyers push it all the way up to the key area that Nexgen users knew about. Push it down to support, to resistance, to support, to resistance. And look how your large triggers continue to trend up. You can see it on your 5-1 chart. No short trades to be had in here. And now everything's beginning to break. Now we're trying to get north of the 78.42 area. And if we do, and we get odds favorable momentum, and we have no termination conditions, guys, we're going to look for that pullback. Momentum trade. When there's a great termination condition that creates a full reversal that gives strong triggers, first shot comes from the mid-bands 1-to-1s if there's no divergence. And there was no divergence potential on that one. I'll be darned, it worked. Patterns, gentlemen and ladies. Everything we do revolves around pattern recognition. Nice trade, John. What's the easiest way to pattern recognition? Are you ready? Guys, this is your trade tracking performance sheet. This is provided by Nexgen for new users. Yeah, Ed, I know you like that one too. This tracking sheet does a couple things for you. The first thing it does is it provides you real-time, as you learn, everything that you do, you put into this spreadsheet. You're going to enter your trades. Let me put mine up here. I've got one that I'd love to share with you guys, but I have to ask permission to do that. Your trade tracking sheet, every time you take a trade, you're going to post it into this sheet. This is what I did. This is where I was. This is where my head was. Winner or loser? Did I break my rules? Did I follow my rules? When you do this, this does a couple things. The first thing that it does for you is it tracks the patterns that are making you successful. What you're going to find is a correspondence between following the rules by taking the absolute best of the best, and then seeing how that turns out for you. The other thing that it does is it teaches you to recognize patterns in yourself. And guys, this is also what the classroom is for. My job is to recognize patterns in you. My job is to recognize maybe when rules are broken, when you tend to jump in or out early or late. But you're going to see that on this spreadsheet. My pattern, as pointed out by John Novak when I began with the software, is I was notorious for trading in determination conditions. And I knew that because I posted in the room and I got that feedback, no matter how painful it was. But I recognized that I kept trading in determination conditions and I kept losing. And I got that feedback and I was able to fix that problem. The next thing this sheet does for you, and let me go back to this one. Hey there, I love Dooney B11. Is that second page is your favorite look. Your favorite look. My personal trade setups, my strong triggers, no terminations, my nothing in the way, and my best entries. I'm going to fill this section. I'm going to fill it with pictures of me managing trades. I'm going to put in termination conditions, patterns that I recognize. Guys, this is going to create confidence in what you're doing. And if you look at my spreadsheet here, under my favorite looks, you guys have been nice enough to give me about 85 pictures of high probability trend trades. And because I'm a giver, on that downloadable spreadsheet, here's 70 of them. So you can take a look at these trades, compare what you're doing, going through, and growing with the software, growing in the classroom, growing as a trader. And that's how you're going to get there. Laggy computer. Let's see what that trend trade pre-entry. Strong triggers, smashing through from a termination condition, looking for that area of support inside of favorable large triggers. Oh, it just didn't come back, did it? You caught the short at 1034? Or the long, Karis? Oh, the momentum long? That's a pretty look, isn't it? That's not in everybody's quiver just yet. This is a beautiful look. It takes a little time, a little study to learn to recognize it, but man, it's a good one when you start getting it. KR, let's see what you did. Nice to see you posting, KR. You guys, here we go. What do we have? We have termination condition, termination condition, termination condition, everywhere. Trigger lines break, strong, reversal, picture perfect, momentum entry, and we know that one went straight to the fib. KR, beautiful trade. John says he was willing to pay for this one, more up to 4,004, but not getting it either. May wait now because it's too close to the targets and the pivot stop out. Coming into that area where the market is likely to go. One of the things that happens here, and I'm going to use this picture. I want you guys to see this. 402.50. We'll call it that one right there. How are we gauging if there's room to a target, guys? Does anyone struggle with this one? This may not be the best picture for it. A lot of people say, well, I just don't have much room, John. There's like 1.5 points. Mark, there's only 1.5 points to get to that potential target. One of the things that you have to remember is that we're buying a pullback, which means that 1.5 points turns into 5. So it's gauging from the pullback area, not gauging from the top of the bar. Does that make sense, y'all? And then John put it all together. He reached a termination condition on the 21.3. He uses that larger chart. It's also a 50-50 on that divergence high. And it's also divergence coming on that 5-1. And there's just too much termination. Not willing to take that one. And that's why, guys. Termination condition, 3 divergences in the same location. Small's below the large, but the large are above my reversal bar marker. Does anyone remember the picture from earlier? When price reaches a Fibonacci area, here we have that midband. And there's more than a full bar's distance back to those large triggers. You have to be aware. This acts as a vacuum. It doesn't always, but it certainly has the potential to. Just incredible. Awesome name. You took the short from higher up. Didn't quite work. When it rolled over, you took advantage of it. Very nice heads up trading there. Justin, this is great. This is the same lesson that we talked about. If that trend trade doesn't work, let it roll. And then you took advantage, grabbed that short. Wow, great heads up trading. Nice job. How long have you been with us, Justin? Karis, strong triggers, breaking through, picture perfect entry, rockstar exit. You held that second one a little long. Second trial, second day. I thought I recognized the room. Well, it's good to have you back. If you have any questions, I knew the name. If there's anything I can do for you, Justin, let me know, okay? And that goes for everybody, but especially you guys on demo coming back, looking at it again. You like to hold the second half for the run? No worries, Karis. I know that you're pretty solid, but divergence from a fib with no triggers, that might have been your run. But when your entry is that perfect, you can afford to give a little back, can't you? Nice job. Beautiful trade. Guys, this is all we're doing every day. We're waiting for advantages, right? When those advantages are present, we're going to take them. When the 5-1 has triple divergence and the 13-2 is a failed 50-50, is that a good top? Not always. Not always, KR. But the flip side of that is when this is also a termination on my 21. It's a 50-50 losing momentum, 3 divergences. When these roll, I like it. If it's not coming directly from an area, I like to let things roll a little bit before I begin looking for it. Does that make sense? Because everything is still above this key area. Let them roll. The market will let you know when it's time. It really will. You trail, still working out the exit conditions a bit, incorporating divergence, nice. Karis, one of the things that I recognize a lot is when you get divergence directly from an area, it tends to push up a little higher. It does happen very quickly. Jose, the 13 white is one of your templates. If you right click and go to templates, and it depends on how long it's been, but you can go 5-1 Rinko with 13-2 reversal bar marker. See if you have that one. If not, I bet you John's about to post the template in the room for you because I see him typing. There you go. You can update the templates from the resource page. For those of you that have never done that, it's really easy. Go to the resources page, and all the updated templates are there for you. Or you can do it manually like John said, and maybe he'll throw that one in there for you. Testing in a Kai pad. I don't know what that is. It should say 5-1 Renko with 13-2 reversal bar marker, Jose. Hey, Karis, do me a favor. When you do stuff like this, share it. I love to see it. I'm not so arrogant as to think that there's only one way to do something. I love it when you guys are doing other things because it means that I get to learn. We've had people that use our software to complement what they do so that they can see these areas. It's just a mini pad controller. Oh my gosh, just reading the description, it feels like it's outside of my pay grade. All right. That's awesome. That's so cool. I love my engineers. I wish I could think like you guys do, but I don't. My brain does not do that. Karis, I want to write a poem about your Akai pad. I don't want to learn how to use it. John Horde, let's see what we have. Getting in a little bit low, right, John? Rule number 3. Let that thing pull back, especially if there's a loss of momentum. Guys, remember when we talk about the window of opportunity, and John, I like the trade because there's no doubt in my mind the 13-2 is cranking a little bit. When we're looking for entries, when you're looking for entries, there's no we in trading, sorry. John, do you see how we've lost momentum here with that divergence? The small are pretty close to the large. Your window of opportunity goes from the mid band to the fib. When you start losing momentum like this, and I'm not sure what the 13-2 looked like. I don't know if it was odds favorable or if it was slowing down. But the slower, the more momentum that you lose, the more likely it is that that pullback's going to go a little deeper. So with these triggers split, without really strong triggers, I love that top range. And I'm glad that you kept your head in the game and got back in and were able to reclaim because everything said go, right? How to put the background back on shape and capture. Ed, I'm not sure what that is. So let me open up my capture real quick and let's see if I can help you. Guys, here we have a pivot from nowhere. Loss of momentum, couple losses of momentum. The odds are favorable. This thing is going to push up to one of these key areas, maybe the mid band. No trades to be had yet, right? Not yet. Ed, if I take a picture with capture, so let's see, shape. I'm going to double click it. Nope, I'm going to right click it. Ed, I'm not sure. You fat fingered the hotkey. Oh, okay, I gotcha. That makes more sense, huh? Hello, Safia. First picture. Awesome. Let's see what you did today. Everything's set up. I'm not sure where you got in. Can you do me a favor, Safia? And I hope it's okay that I leave the hello off of it. Let me find my picture real quick. I take so many pictures, guys. I'm going to give you the annotating chart pictures. I don't know if you guys know this. I take an awful lot of pictures. Over and over and over and over. And I took one about how to annotate your charts. You know what? Let's just do one together. What do you say? Because, Savia, it looks like you're trading with the direction. I love it. It looks like you're trading with momentum. I love that as well. Both of those are going to create amazing advantages for you. But if you'll do me a favor when you take a picture, are you using Capture or are you on Snagit? And guys, this goes for everybody. I'll do it with Snagit because that's what I have. Awesome. So the easiest way on your 13.2, just write your rules. And I'll tell you what, I'll make it even easier for you because you're using Snagit. Take a picture of this little checklist, Safia, and go ahead and put it on your chart, just like this. And what this is going to do is this is going to remind you each and every time you take a trade to look at what you're doing. Is the market coming from a good top, a good bottom? Write your rules on there. But the most important thing that you can do is show me where you enter the market. So by looking at your 13.2, I can tell very easily that everything was going up and everything was going up strong, and you gave yourself the advantage of momentum without a doubt. I'd love to see where you entered this trade on the 5-1, because maybe you're jumping in, maybe you're focusing on something else. Maybe you grabbed hold of that tiny little pullback right there, which I like. And let me know what you're doing. And it also looks like you may be missing a lot of fibs on your 13.2. Safia, are you with me right now? Let's do this together. Right click on your 13.2 and go to your templates and hit load just like this. And that 13.2 Rinko, click OK. Let's see if we can get some fibs back on your chart. But I sure do like the way that trade looked. All the momentum. Didn't look like there was anything in the way, and you just took advantage of that momentum and made some money. Great job. Karis, you say you've uncovered the mystery of why some pullbacks go further than others, i.e. why you used to get run over when putting a limit order in the area. It has to do with John's market flow genius. Don't tell him he's a genius. He's going to believe you. Ed, perfect entry. Absolutely perfect entry. Love everything about it. Didn't want to lose money. Ugh. Didn't want to make money. Let's change the wording on that one, Ed. Watching those ticks, hopping out. Watching those ticks, hopping out. Ed, at least get that stop behind. Give yourself a fighting chance. You knew where this market was going. You're great at reading charts. You knew you had momentum. You knew you had the perfect entry, and your risk was zero. By the time you get here, you have nothing to lose, and you can lock in behind those areas. Let the market do what the indicators say it's going to do, Ed. Beautiful entry, though. So let me turn that around and say absolutely beautiful entry. Couple more big wins like this and you're going to start trusting it, without a doubt. How do I determine where it's going to pull back to? Karis, do you want to see mine? When my 13.2 triggers look like this, that's my expectation, right? If I start getting slowdowns, I expect it to pull deeper. It's really that simple. And watch this. Let's go to this one. I love chart reading, guys. It makes me happy. Karis, when my triggers look like this, financial suicide to get in low. Pushes all the way up. And everybody's going to have a different way that they see. Everybody's going to have a different comfort level. But I can tell you, in my experience, that the more momentum you have on the 13.2 without a loss of momentum on the 5.1, that's why we pick the top of that window. That's why we make sure that we're in without missing the trade. And now look at this one. Odds favorable momentum. Look at this. Multiple divergences, small inside. Look how shallow that pullback was. It only made it to that key Fibonacci area. Karis, I have to go simple. I get distracted by shiny things. Oh my gosh. I just had a mild meltdown. Karis, we're going to get you in a 12-step program for simplicity. Actual bids and offers. Oh my gosh. I love it. I love that everybody thinks differently. I am the equivalent of a caveman playing with a rock. And if I can use that rock to catch dinner, I'm pretty good. Match it up with John's market flow. Look at that. Smalls inside, divergence, odds favorable momentum, shallow. I work on patterns. I'm a patterns guy. Odds favorable momentum, only one divergence, strong triggers, shallow. One more. Odds favorable momentum, multiple divergences, takes out that previous pivot and rockets to the stars. I don't think one's better than the other, Karis. I really don't. I think that one of the patterns that's important to recognize and remember is that if I see a pivot stop out on my 5.1 like this, more often than not, it takes out that previous pivot. It helps me identify my potential entry. So, look at this. So what do we recognize? There's a pivot stop out, small triggers inside, no areas, no reason, right? We expected it to go deeper, didn't we? Because of this look. Should have kept you safe. Now we have odds favorable, everything cranking. One on top of the other. Did that hit something? Nope. Just sellers decided it was time to go down. Does anyone else have as much fun as I do doing this? Yuri, up, 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 up. Perfect entry, making money. Nice job. I love the patterns, guys. It appeals to my brain quite a bit. Couple of quick ones. Who was this? NG time. Everything says up. I like that you used a mid-band here. Would have loved to have seen those areas here. Losing momentum. In G, it's easier and easier. The stronger the momentum, the areas inside, the easier your job is. Nice job, though, on that one. Karis, your efficiency on entries from 72 to 84, use that tool. Holy smokes. That tool works for you. Don't give up that tool because it's not what I do. Elvis, let's see what you're doing. Guys, this is fun. Anything can happen, triggers. Divergence, divergence, divergence. You're in an area on split triggers. Elvis, what advantages did you give away? And this is what I like to do. Let's look at this picture again. This was an epiphany moment for me. I love that. Karis, thank you for being here. It's nice to see you again. Elvis, you didn't have strong triggers, so you gave away the advantage of momentum, right? You had 3 divergences in the same location, which lets me know that the termination, that the trend can end. So you gave away the advantage of a clear path. I see it. Strong triggers for long. I respectfully disagree. Those triggers have already worked their way inside of the large. So I have weak triggers. Let's start at your 21, right? Strong triggers without a doubt. Let's look at it. Strong triggers without a doubt directly into a pivot stop out with the large triggers well below. This is just what I see. I do like the strong triggers, but you're directly into a 50-50 on a termination condition. So I'm going to go up to the next chart. Large triggers are up, absolutely. Small triggers are inside of the large at the time of entry. Without question, which means that at a 50-50, we have weak triggers on the 13-2. So we come to the 5-1 for the tiebreaker, right? What are we going to do here? Well, I've had 3 divergences. The third is lower, the smalls are inside. Termination condition, and even more worrisome, is that these triggers are split. Creates challenges. The odds are favorable here that that market's going to push lower. So if you're waiting for a little confirmation, Elvis, let's look for that market flow signal from that 89 area. And since you never get it, maybe even this right here keeps you out of that trade. Does that make sense? I love it. And it takes time and repetition. I always start on my largest chart. If large says yes, what does next size down say? You know? So if I'm only taking trend trades on the 5-1, I've got anything can happen triggers. But if I'm looking for that continuation with odds favorable momentum, and these are kind of flat, and this is losing momentum, and this is a termination condition, maybe I start waiting for things to hit a little lower. I think it's great, though. This is a great picture. Cool. It's fun, isn't it? I love it. Hey, Miss Mary Rocks. Nice to see you today. Let's see what we had. So I'm going to start on your 13-2. And at your 13-2, we have a termination condition that creates a full reversal from a mid-band on the 21-3 with large triggers a full bar away. So the 21-3 says likely to retrace. The 13-2 says resistance likely to hold. That's come over. These triggers are flat. There's not a lot going on here. So you've identified the area of resistance, likely to hold. And when the market retraced to it with everything below, you took an entry at a high volume area. It's not 100% high volume area true. And you were able to make a little bit of money. Mary, the only thing that I could really say on this is as you're looking for that potential short, look at your trigger lines on your 8 range, on your 5-1, and even on your 13-2. Nothing's really helping yet. Does that make sense? And the only triggers that have any strength are those small triggers on the 21-3 working their way up from an amazing termination condition. Good job. Did you get my email about your spreadsheet? I know you're busy and don't always have time, but your spreadsheet is unbelievable. I'd love to share it sometime in class if you were okay with that. Let me know. Jose trades. Smalls above the large are wide, tight little area, triggers one on top of the other, and you decide to make money in the long. Jose, great job. Nice trade. K-Dog, it's just fun to say. KR coming in. Awesome. Thank you for that, Mary. KR, we have a great termination condition. We have the smalls breaking above the large, and those triggers, one on top of the other, right at the key area of support. Area inside a cluster triggers. I love that. Jump in, stop keeps you safe. First target reached, looking to reach that next key area. KR, did it make it? I haven't looked. What is that, crude? We'll take a look. Awesome. Nice trade. Look at that, 3 divergences on the bottom on the 13-2. And I believe when this was setting up, we were talking, look who's winning. The buyers, right? So Mary, this one kind of goes into yours too, where everything's flat. They're fighting, and then everything turns in favor from a great termination condition, and it gives you this. Man, Ed, you have no idea. These are my favorite classes. These are my absolute favorite classes when the market is going gangbusters and you guys are absolutely crushing it. And that's exactly what's happening. Guys, look at this, 50-50, right? Smalls above, large below. There's one divergence slowdown, takes it to the area. There's a second lower, takes it to that, matches it right there. 50-50, looking for the perfect. It's a pivot stop out. It's a 50-50. It's multiple divergences. How many advantages are you willing to give away and still take a trade? All right, guys, I'm going to share something real quick, and then I'm going to take a little break. This is a spreadsheet that was sent to me the other day, and guys, you can do this anytime. Send me your spreadsheets, send me your trading plans, send me anything, your checklists. If you want it reviewed, I promise you, Scout's owner, I'll review it. I'll send you my feedback. The first tab is the trading plan. This is exactly what is going to happen to get that trigger pulled. The second, look at this spreadsheet, guys. Trade after trade after trade. How did I feel? Nervous, confident. Look at this. Little nervous, at termination broke rules. Didn't take a trade that met the rules, little nervous. Little nervous, termination condition. Little nervous, that one stopped out, followed the rules. And then a note, a 13-tick stop would have won. Little nervous, weak triggers. Little nervous, not strong triggers. Guys, do you see the patterns? This is a trade. Here's the result. Here's how I felt. And here's exactly what happened. Confident, 13-2 trend trade. HVA worked, target reached. Confident, trend trade with strong triggers. Targets worked. Relaxed, followed rules, exited with divergence. Guys, when I talk about finding the success that you're seeking as a day trader, this is it. Because there's a correlation. And look at this. On 12:15, frustrated, trend trade, lost, followed rules. What's it mean if you're frustrated when you take the perfect trade? Let's look at the trade. Anything can happen triggers. That's not strong triggers. Smalls inside the large, not our best look, but it's a great look on the 5-1, no divergence. So it's a medium probability trade. It's okay to be frustrated, guys. Remember that anytime you follow your rules and it doesn't work out, it's a cost of doing business. So frustrated eventually turns into relaxed, followed my rules. 50-50 with divergence, no trade, relax. So guys, I just wanted to share that. That is without a doubt the best spreadsheet I've ever had sent to me. And it is incredible. I'm going to take just a moment here. I'm going to tell you, post your pictures, ask your questions. I'm going to go reload my water real quick. And when I come back, we're going to finish strong. You guys keep asking questions. Elvis, I'll start with your pictures when you get here. Gene, that's your screensaver? I love it. There's a lot of similarities between successful traders, guys. Successful traders take a lot of pictures. Successful Nexgen traders have posted in class for feedback. Successful traders have a plan written out and a level of consistency that's unparalleled. I'll be back in just a few minutes and we're going to finish strong, guys. All right, favorite people, let's finish strong. What do you say? What do we see right now on the S&P? I see losing momentum a little bit. I see divergence on the 5-1, but the smalls are still outside the large. If we're losing momentum and losing momentum, is it realistic to believe that that market may push down to a little lower point? $50-50, right? Losing that momentum, $50-50. We'll see what it does. It's an area that has the potential to break but hasn't broken yet. There's a slowdown on the 5-1, that divergence. I'm going to leave that box there. We'll see what happens. I'm going to scroll up and start looking at some of those pictures. Elvis, you gave us some. Let's take a look. So we'll start on your 21-3. Termination condition with divergence, the smalls below the large. 13-2, 50-50, directly into a mid-band. Two divergences, pulls back. It just wanted to go a little bit further up before it went down. Elvis, I think you took a good shot at a termination condition with strong triggers, but it's one of those 50-50 trades, right? Smalls below, the large haven't made it yet, and we have two losses of momentum on the 5-1 directly from that mid-band. Probably going to push up a little bit higher, and that's exactly what it did. Another one of those instances where you could just wait for that market flow signal or wait for that high volume area, something. Elvis, I think it was the right thought. I think two losses of momentum on a 50-50 gotcha. Termination, strong triggers, termination, strong triggers. Everything rolls, no divergence, picture perfect entry. Great job, Elvis, on that one. All right, where's my next one? Ed, let's see what you did. Ed, we have strong triggers. You're coming from a pivot stop out. It's a 50-50 trade. Divergence prints with the triggers down. You take it directly at the bottom, right at a high volume area line. Make some money, make some money. I see 1 point, 1 1/4, 1 1/2. All right, 50-50 with divergence, bottom of the area. 88 was your trouble spot. Probably could have let that one run up there just a little bit. John says a 21-3 says don't go long. There's that 50-50 with divergence with the second lower divergence, right? 21-3 says resistance likely to hold. Harder, not smarter. Just wait for the easy, Ed. Guys, one of the biggest challenges is when you chase the difficult ones and they don't work out for you, you start to second guess the easy ones. Michael Bogatin. I think Bogatin is just so much fun to say. I use your last name every time. Michael, let's see what you got. Michael, same trade, right? 50-50. Where's my mouse? Smalls are through, large are not. Divergence prints, you take the perfect entry. Quick profits, divergence prints, out break even. Absolutely perfect execution on a 50-50, Mike. If you choose to take it with that divergence, you have to be aware of conditions changing. Very well done. Yuri, let's see what you did, my friend. Yuri, strong triggers directly into a termination condition, but here's where using that 21 to determine if he should take a shot into this area. 21 is absolutely screaming. 13-2 is moving fast, but into terminations. Get in with the market flow on the way up rather than the way down. With that much momentum, it retests that key area. Yuri, very nicely done. Nice execution. Gene, missed your entry by a tick. Everything says up. Gene, I love everything about this look. The only thing that I can say about it is maybe a tick above. These areas are phenomenal, but they are areas, right? If I have every advantage, the odds are favorable I'm going to win that trade. If every chart agrees, the odds are in my favor for a winner. I'm going to put that entry a tick or two above and make sure that I don't miss out. Great look though, great trade. Sorry that one missed you. NG, same thing. 21 says we're going strong, but it's not from a good top. It's a 50-50 into a termination condition with divergence. Great entry, makes it easy for you to take a couple dollars. That's a tough trade. It's odds favorable, but it is into a termination condition from a 50-50 with a bad top. I like that you manage it tight. Great awareness. And sometimes that's it, being aware of what it says. Earl, everything clears with momentum, so you take that trade out at the fib. 3 divergences, total reversal. You're in somewhere here where it starts to clear. Earl, I know you have a plan and I know you followed it. Good job. And gee, that had the hair stand up on your neck. Sometimes that's a sign. Is this Jose 50-50 trade? Divergence, divergence, and then the divergence didn't print, so you said, I'll take it. And you held through. It's a nice hold. It's a little iffy, Jose, but you let everything roll. And this is what I like. Notice how when this one doesn't work, everything continues up. Jose, I don't know if you did this intentionally, but this is pretty cool. A lot of people took this one and managed out, right? Well, you manage out because things aren't doing what it's supposed to do. But look what happens. The small triggers roll. The large triggers begin to get above that area that we're expecting to hold. And Jose says, all right, everything says up now. I'm going to take that trade. And by that point, this is working its way up, not necessarily down. Jose, I think you did that really well. A lot of patience there. Came back to the box, didn't it? And then that divergence prints gives you an opportunity to potentially manage out. How we doing today, guys? You learning anything? Feeling good about it? All we're doing is reading charts today, waiting for advantages, looking for the absolute best of the best. Guys, we've got 30 minutes left. I'm excited to ask those of you that are new, where are you at? As far as recognition, there's some really key concepts. Odds favorable momentum, guys. One thing that has been true today is that when those small triggers are outside of the large triggers, when you've got the best of the best push, that market tends to continue. Making sure that we're not trading into termination conditions, giving yourself the advantage of a clear path. Dave B, was it a lucky trade? Let's find out. So let's see what happens. We have smalls down, large down, a little divergence. So it's but you've cleared the area. See how the large triggers have made it through as you're coming through? The anticipation is that this market continues down. You don't jump in at the low spot because we're losing momentum. You get in at the higher point inside of favorable large triggers. It only went up 2 points, not even 2 points above your best of the best entry. So your stop kept you safe in a market that said it was going down. Notice how all of your triggers are still trending down, Dave. I think your stop kept you safe. I think everything said down on every chart. It just went kind of that higher point. Could have gotten the exact same fill when everything says it, guys, market flow signal. And that was your confirmation that everything your indicators were telling you was looking to come true. Great target on the first one. Then we get anything can happen triggers. At a pivot stop out, you take your first profits, and then everything starts to slow down, and you take your exit. Dave B, I think everything about this trade said that it was going to work from where it went. I think that your stop placement or not moving your stop too quickly, waiting for that reversal bar, was the key to success on this one. Every chart said down. It just pushed up a little bit further. So was it lucky? I don't know. I think you just read your indicators and did a great job of it. Not strong triggers, right? Absolutely. Does that line up with what you were thinking? That's how I read it. And Dave, one of the great things to do is put what you're thinking on the chart. Not just for me, but also just for you as you go back and review trades. Putting what you were thinking on the chart helps a lot because it lets you know if it was lucky. It lets you know if your rules were met. It lets you know if you're being consistent. Annotating charts is such a great thing. Look at this. There's a bad top, right? Pulls all the way to support. Absolutely none of the trigger lines break through. Look at the position of those large triggers, guys. Is there any reason to attempt a short right here? I'm going to encourage you guys. We don't need that 5-1. When an area is reached and the large triggers are more than a full bar away, price tends to snap back and close the gap to them. Short trades between the low and the large tend to get run over. You know what, maybe we will show the 5-1 on this one. Guys, this is a chart reading concept that's going to pay dividends if you take the time to study it, to learn it, to look at it, to recognize it instantly. I'm going to put that picture in here. I'm also going to save it, not shave it. And when we talk about our favorite looks in your spreadsheet, I've already shown you an amazing spreadsheet that's yielding results. Guys, steal that picture, put it in your spreadsheet. Focus on learning these patterns. Gene, let's see what you did. Gene's, I love this. Talk about the other side of the coin. When you're recognizing these patterns, guys, pivot from nowhere, pulls all the way back to these key Fibonacci areas. Absolutely none of the trigger lines have broken through. There you go, shave it. Gene says, patterns tell me that this is likely to close that gap. That's a beautiful long. That is some chart reading. Gene, great job on that one. You know what, Nexgen Ben, one thing that I've realized, I thought getting out of Texas was going to cure my allergies. The desert and the desert mountains have their own set of allergies. It's taken me a few days to acclimate, but I'm still fighting it a little bit. All right, Mary Rocks, let's see what you did. Odds favorable momentum, no termination conditions, picture perfect entry right at Fibonacci support, first target reached, and then we get that pivot stop out. And you hold that one a little bit longer. Gene, take care. It's nice having you in class. Good seeing you again. Mary, I know you're pretty set on your stops, the way you do things. Were you here for the conversation? When there's a pivot stop out on your 5-1 and the small triggers are working their way inside of the large, one of the expectations, more often than not, is it's going to take out that previous pivot. Dirt bikes in the desert cure those allergies. I miss fire roads, Ben. This week, Justin, I am in Tucson. We rolled into Tucson last night. We were in Las Cruces yesterday. We were at Big Bend National Park the day before. Enchanted Rock, Texas the day before that. We're working our way west. Word on street is there a happy hour I've got to go to in San Diego, so we're working that direction. I don't. True story, Justin, I am professionally homeless right now. We got rid of the house and 90% of what we own. The kids moved out. They have their apartment. They're doing great. Guys, I don't know if you know this yet, but when you day trade, you can do it from anywhere. You can go to Europe. You can cross the country with your beautiful wife. Doubletree at Reed Park. Is that a hotel? Yeah. We do Airbnbs. We've got a cool little place right on Arizona State campus. It's kind of nice. Beautiful view of the mountains. Yeah, we're only here through tomorrow. We're going to head to San Diego tomorrow, I think. We've got an Airbnb, 2 different Airbnbs for 9 days. My wife takes a contract in Oregon that starts on the 30th of this month. So we're letting all you crazy California people get that flooding and falling trees out of the way so that we can make it up there. I did not bring the rain to Cali. It was there before I ever got there, Angie. Not my fault. Miss Mary, did you catch the lesson on that one? Pivot stop-outs when things are weakening tend to take out the previous pivot. May save you a couple ticks. If you go back and study that look on your 5-1, let's see if we can find a couple of them. Not a lot of pivot stop-outs happening. Here's a good one. There's that pivot stop out as the triggers begin to weaken, it takes out the previous. So if you were long here, you get that pivot stop out. Gives you a management opportunity. Higher divergences or lower divergences tend to create change. Third lower divergence pushes us all the way down into a perfect trend trade. Guys, I love studying charts. This pivot stop out creates the expectation of going lower. This third lower divergence verifies that we will. You know what, Ben, we played this course. John, Melinda, myself, and another person that used to work for Nexgen. We got to play Torrey Pines a long time ago. Beautiful. But it was right after the LPGA had gone through, and it was so tough. There's a pivot stop out with weak triggers. It takes out the previous pivot once again. Third divergence, but everything's pointing up, and then it begins to go. Yeah, at least. You know, the only thing I remember about that trip is that the rough was unbelievably difficult to play out of, and the par 3, where you see all the parasailers, was the only hole that I played well that day, and it made me just love golf even more. Pivot stop out, takes out the previous pivot, and there it goes. So guys, that's a good chart reading, just as you put things together. Here's a bad bottom, right? Not a termination condition, pushes right back to resistance, right back to the mid bands. Not looking for long trades, even with those small triggers up and above. Here's a divergence, pushes directly back into support, right? None of my trigger lines have broken through. Not looking for a short trade, not yet, still has a little bit of work to do. But here, where it pulls all the way back to the mid band, the large triggers don't budge. You get that continuation all the way back up. There's a fight going on right now, guys. Your buyers are pushing and your sellers are trying, but they can't get it past the mid band. The buyers pushed again, couldn't hit that key area just yet, and the sellers pushed it right back to that same area that stopped them cold in their tracks. Let that area break. Yuri, let's see what you got. Smalls below the large are wide, they're angled in the direction of the trend. You're coming from a termination condition that's pushing everything down. You got stopped out on this one, Yuri? Yuri, if I took this trade and got stopped out, I'm probably just going to say next. But you know what I'm going to look at here, though? If you're going to use your 21.3, Yuri, support with divergence pushes everything above. Your smalls are above support. Your large triggers are flat. The 21 said we're more likely to go up than we are down in the moment. Still a good look, but if I had that 21.3, it might make me rethink that one just a little bit. Jose trades, same trade. Got in, got your reversal bar, second higher divergence. Have you guys heard John talking about this one? One divergence, cool. Second higher divergence, things are changing. Becomes a management opportunity for sure. Michael, let's see what you did. I bet I know. Consistency, right? Strong triggers, no terminations, smalls outside, picture perfect entry. Oh, I wouldn't say you got run over. Michael, what I would say is you took the best entry from a high probability situation. When that second divergence printed, you got out at 86.25, where the market shouldn't go. Guys, when the day provides so many winners, sometimes it feels like, oh my gosh, why did I get run over? Look at your checklist, Michael. And everybody, look at the checklist. What does the checklist say? It says he had the advantage of momentum. It said he had the advantage of a clear path, and he also had the advantage of entering from an area where the market is likely to continue. Every day I'll take that one. Waylon, if everything says down and I get a lower divergence and the small trigger's outside, I'm probably staying in that trade. But if not only did I lose momentum, but the market couldn't push beyond that pivot, that's a management red flag for me. That's telling me things are changing. The smalls are inside and I get a higher divergence. Things are changing and not necessarily advantageous for me. Ed, same trade. I love it. Great entry. Higher divergence says don't sit and hope. Nexgen Ben says 100% today. Nice job. How many trades? 13 trades. 100% winners. Largest winning trade, 1250. Absolutely beautiful. Guys, today has been an absolutely epic day. It has been absolutely beautiful. Check it out, guys. Buyers, sellers, buyers. Everybody respected that termination condition, right? Didn't get suckered into going long or short. Sometimes a little patience creates a wonderful payout. John, let's see what you're doing. Lose 2 on the short. Happens. Up 4 on the first half. Head in the game, guys. That's all it is. Back in another life when I used to race motorcycles, they used to say that the difference between a novice and a pro isn't lap times. The difference between a novice and a pro, the difference between somebody that's learning and somebody that's doing is your recovery time. Can you take that short loss, reanalyze, and pick up the winner? Or are you still licking your wounds about losing a trade that fit the rules? The more you trust your rules, the easier it becomes to take those trades. The more you study your rules, the more you post in class, the more you ask questions, the easier it becomes to dust yourself off and take that next great setup. And I'm telling you, it feels good when the trade that should have worked doesn't, and you turn around, you say, well, I'm going to take the money from you anyway. And even if you didn't take the first one, the market said, I'm so sorry about that short trade. Let me give you another opportunity to get paid. And it's still going, isn't it? The most important trade is your next trade. Rambo said that? Oh, okay. I'm thinking Sylvester Stallone. Termination conditions kept you from trying the short. Termination conditions kept you from believing it was a top. Termination conditions gave you the opportunity to make money all the way up. Study rule number 2, guys, because he's a killer. Study your rules. Ask questions about them if you don't know them. Look at all these pictures you guys are posting today. Great job. Great job. Little recap, then we're going to end the day, guys. Rule number 1 says that you have to have strong triggers. Strong triggers defined in pictures right here. In an uptrend, small triggers above the large triggers. The large triggers are wide. They're angled in the direction of the trend. This space between the trigger lines lets me know that the odds are favorable for the market to continue up. The advantage of odds favorable momentum. In a downtrend, small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Odds favorable for the market to continue down. Guys, this is your best of the best. Why? Because when the small trigger lines work inside of the large trigger lines, we've weakened the trigger lines. Anything can happen. And at this point, you have voluntarily surrendered your advantage of odds favorable momentum. Rule number 2 says do not trade into areas likely to stop the market. Guys, simple formula. Price reaches an area of support, resistance, 1-to-1s, cyan divergence low, magenta divergence high, any third divergence in the same area. If the trigger lines haven't broken that area, it's a termination condition. If it's a termination condition and you take that trade anyway, you have surrendered your advantage of a clear path. And then rule number 3, guys, using a limit order to buy or sell a pullback at an area. If you choose to enter before the area is reached, if you choose to enter after the area has been reached, you have surrendered the advantage of trading from an area where the market is likely to continue. First opportunity went from 86.50 to 95.50. That's 9 points until it pulled back and gave you another opportunity, the 50-50 with no divergence. And if you took this trade at 91.75, if you're taking that simple plan of 100 and 200, guys, you made your $300. You're out of the market with divergence and weak triggers on a 50-50. The expectation is probably at least going to take out this pivot, but we don't know where it's going after that. Does that make sense? Ed, I'll whip your ass from anywhere in the country I am, I promise. Yuri, great entry. Watching for change on the small chart on a 50-50 on the large chart, right? Same thing, beautiful entries, 50-50, no divergence, rock star entry. Guys, remember, we monitor change on the small chart, on those large chart 50-50s. Divergence on a 50-50, weak triggers, management opportunity. Your 5-1 said, hey guys, I know you're excited about going long, but let me give you the information you need to take some profits, get out of that trade, and wait for the next one. Does it make sense? Areas likely to break but hasn't broken. No divergence, easy $300 in your pocket. Divergence prints, pushes lower. Show me some management pictures, guys. Gary, 50-50, no divergence, beautiful entry. Money made on the first one. Money made on the second one, divergence prints. You take it as an exit condition. Nicely done. That's the management picture I was looking for, guys. Gary, perfect. I could teach a class on that look, the way you handled yourself in this trade. Perfect entry, no divergence. $100 on 2 contracts, that's $200 in the bank. $150 on the second contract, divergence prints. There's no reason to hope. The market told you it's going to push lower. Take your money. Wait for the next opportunity. Now we're at a mid-band. The large triggers haven't moved. They're still going up. Sure did, didn't it, John? Great management. Larger up, smaller down. Only one divergence. Larger up. These are down. I don't have any rules for this look. If you do, knock it out. Divergence, divergence. Here's another divergence. Pushing it back down into support. Absolutely no trigger lines through. Hey, Bob72. Nice to have you in the room. Gary, those horrible days are the days where we need to see the most pictures from you. It's hard. It's hard when you lose a trade. You don't want to show anybody that. Whoa, there's a big push. Odds favorable. Everything says down. We talked about that fight, right? Sellers just unloaded some guns. No divergence on a 50-50. Small window of opportunity. We'll see how that one works out. Dave B, let's see what you did. Oh, fighting your computer. That's tough when that happens. I've had that. Area inside of large triggers. Area inside of synthetics. Absolutely. If it's inside the synthetics, it's still an entry, Dave. Ideally, they're stacked one on top of the other, just the way they are here. But you've got 1, 2, 3 sets of triggers. But absolutely. That's an area inside of favorable large triggers, especially if the rules are met on the 13 to 100%. I did that Sunday, Gary. Same thing. Sometimes it just feels better. Area has the potential to break, but hasn't broken. Guys, when I'm looking at 50-50 trades, I'm also looking at what's happened. Area reached. The sellers tried as hard as they could, and the buyers pushed back. Weakening triggers. Sellers push, the buyers push back. Odds favorable momentum. The sellers gave it a hard one. We watched that thing spike, right? We're going to see if the buyers want to give another push. On a 50-50, I'm aware of that. And if I'm in at this best of the best spot, I'm ready to manage a trade. Does that make sense? I'm ready to manage a trade. I'm going to take that 50-50. There is no divergence. It's very strong. It comes from a pivot stop out. I had a tiny window of opportunity, but I'm not betting the farm on a 50-50 when these guys have been fighting as hard as they have. Michael B. Let's see what we have. Termination creates a full reversal. You have a 50-50 trade, right? Michael B, smalls are up, large are up, but they haven't broken through that key area. You've got a nice area for entry. I think you manage your stop well. Michael, I think it's a great shot at a 50-50 trade. But remember, a 50-50 trade means that it has potential, but it may not. I think your conditions were perfect to take that entry. Just didn't work. Gary, it's processing. And guys, let me go back to what I just said too. And I want you to see this. The market is nothing more than a fight, right? It's a fight between buyers and sellers. Understanding where the fight is happening is a huge advantage for Nexgen users. The buyers took this market all the way up to resistance, and the sellers pushed as hard as they could, and it only went down to the mid-band because the large triggers didn't move. Your rules say this is a termination condition. The market pushes all the way up to this spot right here. Your rules say without odds favorable momentum, there's no trade. Nexgen users stayed safe during this fight. Sellers pushed back as hard as they could, directly into support. Absolutely no trigger lines break through. No reason to go short. Your rules keep you safe again. Market pushes all the way up to this key area. All the way up to the key area. 50-50 trade once again. Guys, when we're watching this fight, 50-50 is exactly that. This area has the potential to break, but it hasn't necessarily broken. Sellers unload everything back to that key area that's been holding strong. Area hasn't broke, but has the potential to break. When I'm witnessing a fight like this, I have to make decisions on 50-50s. I have to be willing to manage assertively on a medium probability trade. Nexgen rules keep people safe. Gary, there we go. $50-50. Didn't take that 50-50. I'm not sure what happened there, Gary. You were looking for continuation from the support, I guess. Or maybe an accident. That's a quick exit. Same one. Is this the same one all the way through? It is. Okay. Which divergence? On the 13-2, Michael? That's no worries. And that's why I said I liked your trade very much. Because this doesn't print till 3 bars in, right? So at this point, you had a 50-50 with no divergence on the 5-1 and a tiny little area for entry. I love it. Michael, you took a 50-50 trade perfectly. And if you took this short, it's the exact same look. Area with a potential to break but hasn't necessarily broken. Same thing on the bottom here. What I was pointing out is that we've got a pretty good fight going on here. And this support's held strong, hasn't it? Trigger lines haven't been below this area of support. For me, this is a 50-50 that I probably am going to stay out of. I'm going to make them smash through 78.67 before I look for shorts. Ed, thanks for being here, man. I always appreciate you being in class because you always post charts. There's always something to learn when you're in here. I appreciate that. And guys, that's about it for me. We're going to do this again. I've spent the last 3 months talking about nothing but rules for the first hour. We're going to start focusing more on live charts. We're going to talk through what we see. John Novak, continuation style trade. Trend trade fails. Triggers roll. Pull back to the triggers. Looking to finish the move. Textbook. Good stuff. Guys, thank you everybody for being here. Oh man, I had a blast today, Ben. I love it when the market's moving like this. And I love it even more when our rules keep users from getting into trades that otherwise look pretty. So, good stuff. Guys, I'm going to be back tomorrow morning, 9 a.m. Eastern. We're going to do it again. We're going to do this every day until you guys get to where you want to be. And that's the goal. If your goal is to be a professional trader, I want you posting every picture you take. I want you asking every question that you think of. Give me the opportunity to get you where you need to be. Guys, the market was amazing today. It was giving it away. If you didn't get your share, go back and review. Look and see how many high probability trend trades you chose not to take. And let's figure out how we can get you to take them next time. Guys, I'll see you in the morning. Everybody take care. Thanks for being here. Remember that today has been recorded. It will be available on the YouTube live section when we're done. Thank you so much, guys. We'll see you tomorrow.